everyone. Welcome back to your daily dose of vitamin C. Really happy to have this episode out now. This is going to be your first episode of C for Conversations. Today, we have someone from the trading psychology field that I personally call my indirect mentor. He is my idol. He is a clinical professor of psychiatry and behavioral sciences at the SUNY Upstate Medical University in New York, a trading coach to various financial firms including hedge funds, investment banks, prop trading firms, and asset managers. He graduated from the Duke University in 1976 and received his PhD in clinical psychology from the University of Kansas in 1982. He wrote 4 books in trading, and that's how I got to know him actually. He wrote Trading Psychology 1, Trading Psychology 2.0, Enhancing Trader Performance, and a Daily Trading Coach. He has an upcoming book, but for now, very lucky to have us with us, Dr. Brett Steenbarger. Welcome to the show.
Well, thank you for having me. I am a psychologist, and I work with traders in financial markets to help them with their performance. And so that means I work with hedge funds and traders who employ different strategies. I work with proprietary trading firms that do more of a day trading. I work with investment firms that hold for longer periods of time in different markets and different strategies.
Can you tell us what exactly is performance coaching and why is it important?
Performance coaching is important because the states of mind that we enter into affect our decision making. Our energy level affects our decision making. Our level of concentration and focus affect our decision making. So there are many psychological variables that affect our performance. And that's true in different fields. It's true in athletics, it's true in competitive games, and it's true in trading. So my role is to help people make the best decisions possible by drawing on their strengths and by helping them correct their weaknesses.
Thank you. I love that. I've read that you specialize in brief therapy. Can you tell me more about it?
Yeah, brief therapy are short-term approaches to changing our behavior, changing our thought patterns, changing the way we feel and react to things. It turns out in the research in psychology, there are many short-term techniques that are very effective to help us deal with our emotions, with our behaviors. And so I teach those techniques at the medical school in Syracuse, New York, and I use those techniques in working with traders.
So let's begin. I think we've sent you a few questions that everyone would be happy to learn about. Here's one. The first question is, what would you advise a complete beginner when starting out in trading?
Okay, good question. And I'm glad that the question's coming up when the person is a complete beginner, because that's the time to be asking questions like that. So what I would advise a complete beginner is to not put their money at risk. In other words, a complete beginner should not trade, period. Okay.
Yes.
A complete beginner should learn trading. Okay. So it would be like if you asked me, what would you advise a complete beginner when starting out in mountain climbing?
Yeah.
Well, you would start out by not climbing steep mountains because you can get hurt. So you have to start at the very beginning. And fortunately, there are good resources available to teach trading. There are also good resources for simulated trading, where you can try different trading approaches and techniques, and you can learn markets and place trades in a simulation mode so you're not putting your money at risk during your learning period. That's really important. And then in your simulated trading, you start to figure out what makes sense to you, what you're good at, where your skills are. And then as you experience success in the practice trading, then you can start to put your money to work and actually trade your capital.
So it's a process, and they have to be patient about it.
Yeah, it's, any performance field is a process. If I'm learning chess, if I'm learning a sport like football, if I'm learning mountain climbing, it's a process. There's a real learning curve. People sometimes think that they could just start trading right away and make money. That's crazy. No one does that. What we do is we go through that learning process. My experience with people at prop firms that have good training programs, where every single day they're teaching you, and every single day there's practice, even then the learning curve can easily take 18 months to 2 years before a trader is consistently profitable. Which makes sense, because it takes that long to be good at a sport, to be good at a performing art. It takes a lot of learning and practice.
I agree. Here's the second one. How do I bounce back from an almost wiped out portfolio? And I get this kind of questions all the time, but I'd really like to hear from you.
If your portfolio is almost wiped out, then you don't bounce back. It's too late. And I'm being realistic here, okay?
Yeah.
The whole purpose of the learning curve and doing the simulated trading is so that you don't wipe out your portfolio. Now, if you have almost wiped out your portfolio, the important thing is to stop trading and to go into the practice mode with the simulated trading and establish your strengths, establish profitability in a practice mode, and then gradually, that's the key word, gradually get back into trading if that's what you choose to do. Risk management is so important to success, so that when you lose money, and everyone loses money in trades every so often, when you lose money, you're losing a small fraction of your portfolio. You're never putting a lot of your portfolio at risk. So that way you can go through losses and not almost wipe out your portfolio. If you've almost wiped out your portfolio, stop trading for a while, get your bearings, practice trading, do it in a simulation mode, and only until you can be consistently profitable in practice trading should you go back to putting your money at risk.
Perfect. The next one is, how do I manage my emotions in times of losing?
Yeah, another good question, and something people encounter quite a bit. Losing is part of the game. Markets are not perfectly predictable, and we are not perfect in our execution, so there are always going to be losses. In fact, the successful traders I work with easily lose 40 to 50% of the time on particular trades, easily. So we need to be able to understand and accept that losses will occur. Things can happen in markets we can't control, and we're not perfect human beings. We can make mistakes. What I like, and what I talk about in my blog, that's Trader Feed. It's TraderFeed. blog.com. Is that many times our losing trades teach us something.
Oh, yeah.
In other words, we lost for a reason. Maybe we didn't manage the position well.
Yeah.
Maybe our idea about the market was incorrect. But something went wrong, and we can learn from that. And so the losing trades very often teach us something and can create new opportunity. In my own trading, often, this has been happening fairly often. I will place a really good trade, a trade
Yeah.
that's worked in the past rather consistently, and it will start to go my way, and then it will reverse, and I end up scratching it or taking a small loss. And I'll say to myself, that was a good trade. That idea usually works. That should have worked. Maybe something's going on in the market. Maybe the market's not as strong as I think it is, and I'll flip the trade. I'll flip the idea, using the losing trade as information. And so now I'm not managing my emotions in a negative sense because of losing. I'm embracing the loss because it contains information. So I actually want to learn from my losing trades. I'm not threatened by them. Having a losing trade doesn't make me a loser, you know?
Yeah.
It makes me better. The losing trades make me better. And so when you can approach it that way, it's really not so threatening.
Perfect. I'm learning a lot from you. But what about emotionless trading though? I mean, is it possible to do so? I know a lot of traders who feel like this is the best way or the best path forward. Do you think this is possible to do?
No, you're asking about emotionless?
Yeah.
It's ridiculous. No one has that. I mean, that's what people write about in books who have never traded before. Yeah. So, our emotions give us information. If I really like something, there's information there. I'm feeling something because it touches me, because it makes sense to me. And so emotions contain information. And so we don't want to be emotionless, even if we could be. Now, what's true is true. We don't want our emotions controlling us and driving our decisions in a reactive way. That's true. But our emotions many times are what give us a quote unquote feel for the market. In other words, if we're open-minded, we can often feel when the buyers are getting stronger and the sellers are getting stronger. And we do have an emotional feel for that, and that contains information. And so we wouldn't want to shut that off even if we could.
I completely agree, but it really sounds different when you say it. Okay, so I'm gonna go to the next question. And it's
Great.
How do I let go of my attachment to money? This is a big one.
Yes, and I've been writing about that recently.
Oh, really?
On my blog, and there's my most recent Forbes article is very much related to this topic about ego attachments, and the person asking the question is absolutely correct that our attachment to profit and loss is what can get our emotions going and lead us to make bad decisions in markets. And so what I tell developing traders is that there are always things in your life that you should be much more attached to than trading and profits and losses. If you have close relationships, in my case, my wife and I just celebrated our 30th anniversary. We have 5 children. We have 6 grandchildren. So we have a rich life as a family. We have 4 cats that we have rescued.
4? It used to be just 3.
No, we brought on a 4th, a little boy cat. So we have 4 cats. And my work as a psychologist, is something deeply meaningful to me. And so the idea is to have many different things in your life that are meaningful to you, that give you a sense of fulfillment. And when that happens, if you make money or don't make money in the market, it doesn't bother you that much. The trading, the profits and losses are all part of your life. It doesn't, you don't get too attached to it because you're diversified emotionally. You have an emotional portfolio. You have so many things in your life that matter to you. And trading is just one other thing.
That's so nice. You mean like emotional portfolio, living a rich life, it's all about being larger than trading.
Exactly. And I'm writing a book right now that is very much related to this topic and to the entire topic of spirituality and trading.
Oh, I can't wait to get it.
It's a unique topic. I don't think anyone's really addressed it in detail, and yet I think it's very important. And the basic idea is that the problems we encounter in trading very often are not psychological problems in the sense of having, like a mental illness or some, diagnosable emotional condition. It's not psychological in that way. A lot of the problems we encounter in trading are because we get our egos too wrapped up in the results of our trading. And so that's why we overtrade. That's why we get fearful about losses. That's why we have trouble sizing positions. Our egos get in the way. And so spirituality, in all its forms, are ways of getting beyond our ego and getting in touch with our souls. And when life, we don't have to attach our egos to any one thing and have them control us.
Oh, I love it. We've always talked about having a deeper purpose about trading, but really, this is something we're very interested in. Thank you. So
yeah, the key is if you couldn't trade for some reason, if something happened where you couldn't trade anymore, would you still have a full, happy life?
Wow.
You want to make sure that you're in that position, because then you don't need trading with a capital N. If you need something, it controls you. So you may want trading, you may want to be successful at trading, and that's great. But if you need trading for your happiness, if you need trading to feel like a successful human being, your ego is totally wrapped up in it. It will control you.
Oh my gosh. This is such a wonderful question and wonderful answer. I just learned so much.
I'm glad the question came up. It's a relevant question.
Thank you. The next one is about what is the difference in the mindset of trading to win compared to trading not to lose?
Yeah, good question. Trading not to lose comes out of performance anxiety, fears of loss, fears of doing things wrong. And so when we trade not to lose, we have trouble taking appropriate risk. And so people trading not to lose sometimes will size their positions very, very small, or they'll avoid trades that are really good trades that have proven themselves, but they'll become so anxious that they'll end up not participating in those trades. And so they're not really pursuing success, they're just trying to avoid failure. The mindset of trading to win is focusing on where you have an edge in markets, where you are successful. And either you've identified that through back testing, some kind of systematic work, or you've identified it by carefully tracking your trading results. And so you know from your practice trading and tracking the results that this type of trading is successful, and that's what you focus on, and that's where you take appropriate risk so that you're trading to win, you're trading to take advantage of your strengths.
All right. What must I do in order to avoid fear of missing out?
Yeah, so FOMO, fear of missing out, means that you get so caught up in needing to make the trade and needing to make money that you enter the position prematurely, or you enter a position that you probably shouldn't be entering. But it's not motivated because this is necessarily your best trade. It's motivated because of fear. Now, again, this is coming from that attachment to profits and losses.
Yeah.
So let's say you're trading a particular market. Let's say you're trading, give me an example, like what would be a market you would be trading?
Stock market. Philippine stock market. Yeah.
The stock market where?
Philippines.
Yeah, so you're trading the Philippine stock market, okay. Well, think of how much you're missing out by not trading lumber futures in the U.S.
Yeah.
or how much are you missing out by not trading interest rates in Southern Europe? We are always missing out.
Oh my gosh, that's true.
Yeah, and so again, you want to not be perfectionistic in your expectations of yourself. Of course, you're going to miss some movement. Not all movement is opportunity in markets. We can't participate in all markets. We're not perfect. Of course, we're going to miss out. That's all right. Now, if you miss out on a trade that really was one of your strengths, then again, we have to approach it as a learning situation. Why did you miss out? Were you distracted? Were you looking at the wrong things? So again, that missing out can become a learning experience that makes us better. There's nothing to fear about it. We in a sense, we want to make mistakes. If we do everything perfectly, what do we learn from? There's nothing to learn from because we're perfect.
Oh yeah.
So what we do that's not perfect, the mistakes we make are the opportunities for learning and development. We want to embrace those. And once we treat them as learning experiences, we don't have to fear them.
Oh, it's just a shift of perspective.
It is.
I love it.
And I've been trading for quite a number of years, and it took me some time to make that shift of perspective, and I think that is part of the learning process for developing traders.
Thank you for that. So we're going to the last question, and then we're going to do a Q&A now. Last question is actually my question, and it's this.
Great.
What would you advise someone who wants to follow your footsteps?
Oh, I think the important thing in life is that we be ourselves. I mean, that's very nice. If someone would want to follow my footsteps or someone else's footsteps, and I'm happy for people to learn from me and with me. But the advice I would give is to look at the footsteps that you have already made in your life.
Yeah.
And figure out their direction, because that's what you really want to follow. We do certain things well in life. We do certain things not very well in life. And your strengths, what you do well, your successes, will very often point the way to your future success.
Wow.
So you look at what you've been most successful at, what you've been most happy and fulfilled in, and that very often will be the set of footsteps meant for you to follow. Not necessarily the footsteps of someone else. I think a lot of traders make a mistake of seeing someone they think is a successful trader and they want to copy that person. You see it online, in chat rooms, whatever. I think it's a real mistake. It's a real mistake. We can learn from others, but the footsteps we want to follow are the ones that have led to our success. And so we blaze our own path.
Oh, thank you. That's something I would reflect on for the whole week, maybe.
Okay, wonderful.
Thank you. So we're gonna have 5 minutes for Q&A.
Okay, seriously.
So this is from
based on the
Okay, this is from Sirius. He said, "Hi, Dr. Steenbarger. Based from the hedge fund managers that you've met or coached, could you give us the top 3 challenges that they encounter and the solutions?"
The challenges of hedge fund managers and the solutions?
Yeah, the top 3 challenges that they encounter, I suppose.
Yes. Okay. So I wrote a book called Trading Psychology 2.0, and actually that's what that book is about. So the first challenge that they face is understanding themselves and what they are really good at and where their successes come from. Many times they look at what they're doing wrong, they're looking at their mistakes, and they don't really analyze their successful trades. Those successful trades over time are there for a reason. They are pointing the way to what you understand well, what you do well.
Yeah.
And so studying your successes and building those into best practices, that's something I've worked a lot with hedge fund managers. A second area I've worked with them on is adapting to changing market conditions. The market at one point in time can be very different than the same exact market at a different point. There can be differences of volatility, differences of trend, correlations may differ. And so we can become better at identifying when markets shift and adapting to those shifts. So that's a second area that I work with. And the third area would be creativity and how to become better at generating ideas, seeing markets in new ways, developing new sources of information by networking with other traders, by developing new data sources, and so we can see more things, understand more things, and develop different and promising ideas, unique ideas as a result.
Okay, thank you. So it's all about having a new idea, trading, becoming
new ideas, adapting to markets.
Yeah, adapting to markets.
And developing your strengths. What I don't work with hedge fund portfolio managers on is things like discipline.
Really?
Oh, no. I mean, if a person didn't have that kind of discipline, they would never get to the point. At one fund where I've worked full time, the minimum portfolio size was $200 million. That's the smallest.
Okay.
Yeah. You don't get to that point in your career if you let your emotions control you and you have no discipline. So by that time, traders and portfolio managers are working on very different things. They're not working on tactical analysis patterns or discipline or things that a lot of people write about.
Oh, you're right. So they're at another level now.
Yeah, it would just be like working with a professional athlete versus working with some little kid who's
of course
in your league at school. I mean, it's totally different. And that's fine. That's fine. We all have different challenges at different phases of development. I see there's another question.
Okay, it's from Hello Kitty Trader. He asked us, would you recommend personality development seminars or programs to traders?
What do I recommend as far as personality development seminars for traders?
Yeah, would you recommend it? Do you think it's gonna help?
No. Yeah, and to be honest with you, we develop personally by having personal experiences. We don't develop personally by going to seminars.
Oh my god.
You can learn information by going to seminars.
I agree.
Maybe you can get some inspiration from a seminar, but we learn from personal experience. That is broadening ourselves and having new and different experiences. That's the greatest way to develop ourselves our trading.
Oh my gosh, I completely agree. So I think that's our last question for tonight. Thank you for giving us your time. I'm sure we really enjoyed it. My chat box right now has full of them messaging us. Thank you.
Wonderful. Well, thank you, all of you, and thank you, Christine, for setting all this up. I appreciate it.
I appreciate it more.
Yeah, I thought it worked out.
It did. I'm so happy. I hope I could meet you in person soon. And
wonderful.
Thank you. Good evening.
Okay. Have a good evening. Bye-bye.
Bye.